Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is our Market Insider TV opening commentary, and it's Monday, May the 5th. Hope you had a great weekend and are looking forward to a good week of trade. It's a pretty normal trading week ahead. Looking at my calendar here, FOMC meeting Tuesday and Wednesday of this week, but as far as major reports go, it's pretty quiet. In a lot of sectors. Next week, on the 12th, week from today, is the supply and demand report, then CPI, NOPA crush later that week, and just a lot of reports coming out the following week. But this week looks kind of quiet as far as reports go for the entire week. So looks like a beautiful week across a lot of the country as far as weather goes. Let's talk about some of these markets and what we see in the trade. Dollar index down softer here this morning. Natural gas is just slightly higher. Crude oil is down $1.20 right now, but has been lower than that. It was announced over the weekend that OPEC announced their second consecutive increase in oil production, adding another 411,000 barrels per day. That starts in June. And more supply hitting the market. Of course, our administration wants even more drilling to be done, more supply to be pushed in the market, driving prices lower. I don't think we've really seen this at the pumps very quickly. I'm surprised our pump gas prices are not dropping further than what they have, considering how far our crude oil prices have dropped. But we were down over $2 overnight. We're down $1.25 this morning. Stock market lower. Gold and silver sharply higher. With the lower stock market and the lower U.S. dollar. Meanwhile, corn down 3.5 in the old crop. That's making new lows for taking out last week's lows. Dees down 2.5. July beans down 4.25. A little bit of disappointment after President Trump tweeted over the weekend he has no plans on talking to President Xi from China this week. November down 3. Meal and oil still seeing some spread trade there, and the wheat's down 2 to 5 cents in our overnight markets. So let's talk about what is some of the other driving forces, and make sure you check out our website, MidwestMarketSolutions.com, if you haven't already. So growing conditions really nearly ideal this week for newly seeded corn and soybeans, and winter wheat conditions expected to improve. Slow soybean harvest progress in Argentina should continue to try and be supportive to old crop soybeans and soybean meal futures. That meal harvest, or soybean harvest in South America, especially Argentina, doesn't look like it's going to improve anytime quickly, but their forecasts are drier. That should allow them to start harvesting more, but they just will remain behind the normal pace. This afternoon's crop progress report, corn seedings could reach 40 to 45% complete, soybeans at 30 to 35% done, and winter wheat seedings advancing to 50 to 55% complete. In this afternoon's report. Winter wheat conditions, I think, will improve 1 to 2% and be near that 50% good to excellent, eclipsing last year's ratings. Soybean harvest is nearly done in Brazil. We're 98% done, and corn harvest, the first one, is 87% done, just ahead of the average. But then Argentina's soybean harvest, only 25% done. We usually were about 50% done at this time, so that's a slow pace. It should improve, should see more harvest coming on. That will limit the upside for soybeans, but that's given us a lot of strength in those old crop beans and meal. Corn harvest in Argentina, 31% done, right in line with our normal pace. So I think if we see some sort of a bounce today, it should be led by soybeans and meal off of this slow harvest pace in Argentina. Additional rains would even slow that pace even further. The cash cattle trade last week, it's very strong once again, 350 dressed. And 222 live in the north. That's $5 better on a live basis. Meanwhile, in the south, 218, $5 to $6 higher than the prior week. In the box beef markets, cutouts values moved higher this week. Choice adding $9.47, and the select increasing almost $8. So some good moves in the cutouts. Has not improved the packer margins very much, as we've had to pay higher in the cash markets to meet the demand, and that offset the higher cutouts. We do estimate the beef packer margins about $137,000 in the red, and slaughter pace last week $552,000. That was slightly above the previous week's numbers, but almost 50,000 head, 46,000 head less than a year ago, same week comparison. All right, calls for this week's cash market stronger once again in the cattle, based off of ongoing strength that we've seen so far. Hope you have a great day, everyone. I'll be doing RFD TV this morning as well as Wednesday, Thursday, Friday this week. Good luck and good trading, and we'll talk to you soon.